Welcome to Markets Now. I'm Michelle Rook with Don Rose U.S. Commodities. Mixed and quiet day in the grains with mostly higher day in the livestock futures. And Don, let's talk about the quiet day that we did see in the grain trade. We did go up, make new highs for the move-in. Soybeans kind of settled off those levels, but all of these grains were kind of trying to consolidate because of first notice day coming up and option expiration.
Yeah, I think when you look at it, you take it by step. I think that was the first one. On Friday here, we did have the option expiration. We hugged pretty close to strike price 10.50 on the soybeans, pretty close to the 5.30 on the May wheat, and pretty close to the 4.80 on May corn. So you have to kind of equal out these options, and it just kind of floats to those numbers as you kind of consolidate. So I think that was the big reason for the consolidation. But exactly right. When you look forward, next Wednesday's first notice day, we're going to find out who wants to own the deliverable stocks going forward. And then, of course, you jump forward to the May crop report right behind it. So it's a 1, 2, 3 punch coming up, Michelle.
Seasonals are a little bit higher usually in the grains this time of year, though, right?
Yeah, they are. You know what? Producers just busy of putting the crop in the ground, not putting it in the pipeline. So you have that natural push up, and then at the same time, they usually have some nervousness around weather. So we usually add a little bit of risk premium because it may rain, may not rain, may be too wet, may be too cold. So you kind of push up on that, but then you have to be careful because it's one of those you push a little risk premium in, but you can certainly take it out as things change. So pretty good until we hit the middle of May, maybe the third week of May. Then you got to be a little bit cautious.
So soybeans, as we said, above the 200-day moving average, you had a bit of a chart breakout. Can that market keep going to $11 if you get a tailwind from maybe some de-escalation of the U.S.-China trade war?
Well, it's very possible. I think number one, I think when you look at it chart wise, we did break out to the upside over that flat top that we had. What were we in, like 8 days of a 21, 22 cent trading range? So we pushed up to that. And then I think, alluding to the first balance table that we're going to have May 12th, it's very possible we're going to get a look at the tariff information, and it might be not as negative as people think. But when you're sitting with soybeans, when you're talking to carry out in our export pace, it's possible that our export pace could be up 20, 30, 40 million bushels. So your ending stocks, report to report could go down again. And usually that's a floor underneath the market support. So that's possible in going forward in the May report for old crop. Balance table on new crop with the acres down probably tightens also a bit.
Does USDA then assume that we have tariffs going forward and that China may not be in as our number one soybean customer? Does that impact the balance sheets and exports there?
Well, I think that's what we're anticipating is that, China's down. But I think I think when you look at it, I think that is the fact that we've been giving up demand to China. And I think in this trade war, we'll probably give up more. But I think we're expecting that we're going to see some of these other Asian countries particularly pick up the pace. It's not like we found a whole lot more beans in the world, Michelle. It's like we just kind of are shuffling around new buyers, new sellers. So that's what we expect. One loses and the other gains.
That's right. All right. Exports have been very good on corn, even better for corn than beans. And we had some Mexico business this morning. Old crop. Do we get over the $5 mark pushed by that or not?
Well, remember, I mean, the new crop is a little negative. The old crop is positive. So the charts are, more neutral right now, but it won't take a lot. Remember, we topped out at 521.5, and that was mainly on demand news. So I suspect as you get to this May report, if the exports would happen to go down 50 million on this report, 75 million on the May 12th report, that makes the balance table even tighter and makes it important that we have to grow a crop. So very possible May 12th report, if it's positive, probably could push us over 5. Then we'll see where we can go to the upside. Some of that is going to be timing when the producer picks up selling again as we get into June.
So speaking of new crop, we obviously had very fast planting pace to start, but we've had some big rains in some areas. If planting pace is able to catch up, how much pressure does that put on the new crop? And do we pick up more acres, do you think?
Well, I think when you look, I think the producer's not excited to sell corn if it would drift lower from here, only higher. We've got a good insurance price on us underneath it, so that's given a floor. But to the upside, I think is really going to be dependent on more on weather than anything else. But rallies are going to be capped, Michelle. And could we pick up more acres on corn? It's possible. These numbers just don't work on soybeans. So I think if there's an open window going forward, you could see the corn acres go. But remember, on the balance table, I mean, if you shift these yields around, you can go from excessive, 2.4 billion carry out, but you could also have a carry out that goes back under 1.5. So it's a big range. It's big early, and that's why we probably don't have a knockout punch to the downside too early. On the upside is too early to put a lot of risk premium in.
And we had some, I guess, slight gains in the wheat market. We're just off contract lows in HRW wheat. Do we have all of the rains that have fallen in the beneficial part, the benefits of that rain? Do we have that worked into this price?
Well, I think most definitely, I think you hit the nail on the head. We took a lot of risk premium out on, we were dry. We get recharged on some of the soil moisture in the wheat area, much like we have in the Corn Belt. Probably too much rain in the soft red wheat area where India could be a buyer of our soft red wheat. But I think wheat down here, it's probably going to watch if we get into a cold spell, after we got recharged with moisture as much as anything else. But every week we push forward, Michelle. We're marching closer to a wheat crop here in North America. I think we're going to watch China, particularly that Black Sea area. Also, do we get into a cold spell or not as this wheat comes out of gets closer to harvest?
Cattle market, at least the front half of both live and feeder cattle futures ended to the plus on Friday. We're going to have higher weekly closes and some new contract highs in some months. Does this market continue to be able to push higher as long as cash pushes it?
Well, the cattle market is much like the corn market. It's seasonally, it's the right time of year for a market to push to the upside. Middle of April, middle of May, that's our time. We're going into the seasonal strong demand frame. We're going into grilling. So I think it's a matter of, packers losing some big money, continuing to lose money, starting to hear some of these big packing plants starting to cut the hours going forward. So, that's a warning sign. Technicals certainly are at a point that anything can happen up here, Michelle. You can have one more push up here. You can top out on any headline news. Certainly when you have these weights, carcass weights, 34 pounds over a year ago, the thing you always have to be careful of the cattle market in this kind of a structure, if the packer starts to back away from prices and the feedlots start to hold back cattle longer, you start to back up cattle and you put more tonnage in the market down the road. So that is a fear, but watch the demand side of the market.
Yeah, demand, we're going into the best demand time with grilling season, so hopefully that stays together here. And is that also going to be the case? Demand holds together as long as, say, the stock market continues to recover here?
Well, you're exactly right. One of the things we watch is the equity market. You say so goes the equity market, so goes the demand side of the market. But when you look at the economy, a person with a lot of money can only eat one steak at a time. So you got to be a little bit careful when you look at the equity market. But I think it is, and as we know, as you get into the middle of June, you start to get into that July hamburger and hot dog time frame. So this is the window, both technically and fundamentally here, I think, over the next few weeks.
And hogs, new highs for the move. You got June and July over $100. Can we keep going if we get some de-escalation of the China trade war there?
Well, the hog market has, the numbers on cattle aren't there, but they're also not there really on hogs. We just had a lot of disease issues. And, when you look at the pork and cold storage, we had good demand. Pork and cold storage in March was down 9% versus a year ago. Belly's down 26% over a year ago. And we're going to go into BLT season here pretty soon. So I think when you look at the hog market, it's like we say, much like the grain market and the cattle market, seasonals are up. More so on hogs into the gut slot of summer. We do have some chart gaps above the market, which I think the trade will look at. And demand staying under the market. Mexico, our big buyer, seems to be here with us. China, we'll see how they go, but they're not a big buyer overall anyway.
Okay. Thanks so much as always, Don Rose, U.S. Commodities, and that is Markets Now.